Castro. I'm with REO Reseller. Again, just appreciate everybody being here. George O'Brien was the one that organized this call. I want to give a big shout out to George for bringing all you on today's call. Just want to kind of give you a little prelude of what we're going to be talking about today. We're going to talk about the company that I work with, REO Reseller, and what they do. They've been in the investment real estate market since late 2007. In talking to George, we know that there's a need for some people around the Las Vegas area to identify some inventory. So what we're going to be doing is we're going to be talking about what we do, how we do it, what we do for our clients, how you might benefit from it, and then we're going to talk specifically about our markets. And the one thing I want to say right up front, if you were joining this call with the intent of finding investment real estate in Vegas, we walked out of the Vegas market over a year ago, just because of things that I'm sure you're all aware of. Just the market conditions there were difficult. But we've been able to identify other markets that have been very satisfactory to our group of investors. Talking about those, we're going to talk about the markets that we're in, what can benefit you, what pay you in those markets to refer us clients that are looking for investment in real estate. Again, talk about just real quick, just to give you an idea of who we are. I'm with REO Reseller. You can go to our website and see who we are, reoreseller.com. We are essentially a one-stop shop investors that understand the value of the real estate market, but don't get their hands dirty. We provide a full concierge service of management so that if somebody buys investment property from us, regardless of the market that it's in, we provide them with a management contract that will enable us to take care of that client. Whether they live in Vegas, they live in California, they live in Europe, they can buy a piece of property and we'll help them perform all over the country. Just real quickly, just to give you just a quick idea of what our formula is, it's pretty straightforward. First, we research the areas, do a lot of market research as to what markets we feel are good markets to be in. I'm going to talk about that as we go down the road. We do not buy bulk lists and tapes. We cherry pick one at a time. We look for neighborhoods where we know have strong rental markets, because they have strong resale value. We understand that when somebody invests in a piece of real estate, they're doing that simply because they want to, invest in a piece of real estate. It's going to give them some monthly cash on their investment, but it's also going to return to them a profit, a nice ROI when they choose to liquidate it and sell it. That's what it's all about. So we look for areas that have good rental markets, but also have good resale markets. We do buy REOs. We do some foreclosures, some private party sales. Most of what we identify is through wholesalers, is off market. We do very little on the MLS. Matter of fact, we do probably nothing on the MLS. It's mainly all off market, done through wholesalers, private party sales, that sort of thing. We do not buy bulk lists and tapes. We do bulk sales. We're going to talk about some of the bulk packages we have. We do work with all the larger hedge funds, Blackstone, Colony, GTSI. We work with all those folks, but we do not buy bulk lists. We cherry pick the properties that we buy. We buy based on the yield, not the comp. We don't look at comps. Everybody here is a realtor, I believe, or familiar with the real estate business. You can't trust comps these days for a whole bunch of reasons, but especially in the markets that we've chosen to be in, the bulk of the inventory that's being bought in those markets are being purchased really by hedge funds and institutional investors. And because they're being bought by hedge funds and institutional investors, they're not on the MLS. You really can't comp out what they are because it's not public record. You don't know what they're being acquired at. We then provide a fully managed system to help that individual manage the property long term. I'm just going to tell you what markets we're in right now, and then we're going to walk through each market, what's in it for you, what kind of commissions we pay in each market, that sort of thing. But I'm going to just explain why we're in these markets. We're in these markets for the same reason the hedge funds are in these markets. The blue dots you see is where you see the highest concentration of foreclosed properties dating back to 2008. These are the markets that were hit the hardest. These are also some of the markets that we're currently in. We try to be flexible and go with the market based upon market trends and where we believe we can get value for our client. We look for low-end properties. We don't look for the homes that sell for $300,000 or $400,000. We don't look for that inventory. Why don't we look for that inventory? It's just simply yield. It's the reason why the hedge funds, if you Google Blackstone or Colony or any of the larger hedge funds, you'll notice that those investment groups are looking for lower-end properties. And I'm talking about stuff that you can buy turnkey for $50,000 up to maybe $125,000. That's pretty much our market. And we do that simply because that's where the yields are. I'm in California, Southern California, now rated, Orange County, California is now rated the #1 most overvalued market in the country. Now that doesn't mean you can't get good inventory in California, just like you can get some good inventory in Las Vegas. But if you look at the numbers, if you look at the yields, in California, a $500,000 home will yield you about $2,200 a month in rent. For that same $500,000 in other markets in the country, You could buy 10 properties that would yield you over 3 times that. So we look at it from the through the perspective of simple return on investment. We don't look at where a house is necessarily located at. We look at what the market will yield. We try to stay with markets that are going to give more cash flow and more diversity in your portfolio. That's, again, that's where the hedge fund, the institutional investor, is focused at as well. I'm going to feature, well, we've got inventory in a number of cities, but I'm going to start with Birmingham. Birmingham is one of the cities that I would consider to be on the lower end of the market. And I'm talking about in Birmingham, and I'm going to show you some examples. You can buy stuff here, $50,000, yield you 12% cash on cash in a market that's appreciated last year by 17%. CNN Money calls it the 10th best overall real estate market in the U.S. It's the 3rd fastest growing real estate market in the nation. New Wire, which is a good indicator of the top 10, the New Wire investors say the top 10 best cash flow markets. Birmingham was 3rd. Birmingham, just so you know, and I'll show you some examples, almost everything in Birmingham you're going to see is 12 to 15% ROI cash on cash. That does not include appreciation. That's just monthly net return on your investment. Revitalization and the economic development in the city has been huge. The city has actually been transformed from what used to be a steel town to what is now really medical and financial services. So it's more of a white-collar, not a blue-collar area. I'm going to show you some examples of Birmingham here in a second. February, we saw this 2.8% above prices from last year, so we're seeing some big increases. We saw a 17% increase in values in Birmingham from 2011 to 2012. You notice here, these are sales prices, the green line. The red line is inventory. You see the market peak, like most of the country, around 2006, 7, and 8, and then it starts to fall back down. You'll notice inventory levels are dropping too. We're having a harder time getting inventory in all of our chosen markets, as is everyone else, but you're still able to get values in this market. You're still able to get homes that you can acquire for reasonable dollars that provide a good yield in a market that's still appreciating. Just to give you some examples of what we do, we know in our flyer we said you can buy into this as little as $29,000. We only advertise this for one reason. We'll inevitably have a wholesaler on this call that says, just sell me the property, you find it, you identify it, I'll fix it up, I'll find the renter, I'll mark it up to what I want to mark it up to. This house here, for example, would probably sell for about $60,000 after it was rehabbed and rented out. Rental, probably about $750 a month in rent. So we can do that. If you're a wholesaler, talk to us. We can put you in touch with our wholesaler on the ground in Birmingham, and they can show you properties. We can also say the same exact house and rehab it for you. But this is really the model we sell the most of. In the last 7 years, 6 years, this has really been our bread and butter. $50,000 or thereabouts. Now, I would tell you that 2 years ago we were selling the same model at $39,000. The prices have gone up. But this type of model, it comes $49,900 is fully loaded price in a strong rental market, fully rehabbed, 1-year warranty. We pay a 10% monthly rebate on this model, so if it's not rented any time in the first year, we pay that rent for the investors. There's no risk in year one. There's no risk of any sort of repairs. We cover all repairs in year one. We pay first year's taxes, we pay the insurance, home warranty, and we manage it. So this is a turnkey property at $49,900. That's really what we sell most of, and I'll give you some examples of what they look like after rehab. This gives you an example. These are the 5 latest properties that we've had rehab, just to give you a sense of what you're buying. This is what I know it's hard to believe. We're most of us, I believe, are in the western part of the United States. $50,000 in California won't buy you a garage. In Birmingham, it actually buys you a 3-bedroom, 1-bath house, rent-ready. And this is a typical type of property that we would sell. There's another example. You can see it's pretty standard. Our rehab teams there, they're indigenous to us. They work for us. The walls are typically done in neutral colors. The floors are typically hardwood floors. We replace typically the counters, the sinks, all the fixtures. Roof, if necessary. This just gives you an idea. They all pretty much look the same. I'm going to show you. This is a little bit of a different one here. I'm going to show you a before and after. This is a before and after on a home that we just recently rehabbed. Look at the returns on these. This house here sold at $44,900. It's a 15% ROI. So $44,000 property netting 15% per annum for rate of return. That doesn't include appreciation. But this gives you an idea. This is what it looks like when we buy it, and after we've rehabbed it, new air conditioner, new flooring, paint it, install a renter, turnkey rental property. This is one that we recently just put up. This is a brand new property. This is more of a higher range property. Zillow had this at $96,000 before rehab. So prior to rehab, $96,000. The estimate on the home was $96,000. Well, 61 to 124K, depending upon what the rehab looks like. We're going to sell it fully rehabbed at $109,000. That's a 13% ROI. Fees in Birmingham, we pay 3% for a referring agent. And that doesn't mean that you have to do everything. You don't even need to do the paperwork. All you need to do is refer us a client. We'll pay you a 3% fee. Your fees are paid via wire transfer at closing. Everything is done through an escrow company. This is all a typical escrow transaction. We buy the properties first. We rehab them, and then we sell them to an end investor. It's all done through escrow, so your fees are protected in escrow. You get a wire transfer on the day of closing for your fees. The second market that we're focused in is Atlanta, Georgia, and most of you probably are more familiar with Atlanta than you are with Birmingham. Frankly, we love the Birmingham market. You pay less in Birmingham for a higher rate of return. In Atlanta, you're not going to get those same rates of returns. You're not going to pay those same prices, but Atlanta is a hot market. Forbes calls it the #1 rental market in the country. CNN says it's the #4 best city in America to invest in, 4th most affordable city to live in. U.S. Economics ranks its 3rd market for job growth. And, of course, the Jackson Hartsfield Airport is the world's busiest airport. Fortune 500 companies in Atlanta, and this is why people like Atlanta. If you got a client looking to invest in real estate, you won't have any problem convincing them that Atlanta is a great market. And one of the reasons why we're still in Atlanta is you still can't get deals there. Going back to the Vegas market, as I think everyone on this call probably knows, the Vegas market really went up quick. I think Vegas, I just got the statistics. Las Vegas went up 20%, 20.1% increase in values of homes in the last year. So they've seen a big increase there. You've seen a big increase in Atlanta too. The difference in Atlanta, though, is you can still find inventory. We can still find 20 to 30 homes there a month that fit our model, meaning it's going to have a good cap rate, it's going to have a good rate of return, we're going to be able to buy it at a reasonable price. You typically around 60% of what it peaked at, so you can still get values there. One of the things people like about Atlanta too, though, is the fact that it's a city that's still a bustling city. It's still a growing city. It's got much diversity in their employment portfolio. For example, if you were to buy real estate in Las Vegas, the concern has to be, well, if something happens to the gaming industry, my real estate values will be affected. That's true. We saw that happen. Atlanta is very diverse. If you look at the pie chart here, it's very diverse in terms of financial services, trade, professional, government, hospitality, etc. So it's a very diverse job market there, and people like that about Atlanta. Cost of living, house for rent, $900 a month in Atlanta. That's $2,500 for that same house in San Jose. And I'm going to show you some examples of homes that you can buy here for less than $100,000. Forbes, again, says it's the 4th most affordable city to live in, and so on. Rent predicted, again, to increase, again, in the 4th consecutive year in Atlanta. National Association of Realtors says rents in apartments will jump 4.6 after a 4.1 jump in 2012. Atlanta is predicted to increase 4.5 over 2012 in rental rates. And Forbes, again, ranks Atlanta as the #1 rental market. This is, again, why, even though the cap rates are less in Atlanta and the prices are higher, people feel really comfortable in investing in Atlanta. Still great value. As an example, this is $59,000, 1970 home, renting for $825. You got more than a 12% cap rate on that, and you can see that's a lovely little home. These aren't older homes. These are nice rental homes in strong rental markets. These are not in bad neighborhoods. These are in good family areas. As you can see by these photos here, just as a couple more examples here, this was built in 1980, $77,000 a month in rent, or $77,000 resale value, renting at $925. And again, you look at the quality of the homes; these are nice homes. And again, you're buying in these things again for less than $100,000. Here, you're pushing $100,000 now. This is a 4-bedroom, 2-bath, built in 2007. This house is only 6 years old. And you can see the quality of this, and again, you're into this for less than $100,000, and you have a cap rate that's still busting 12%. You're not going to find that in most other markets in the country. Again, in Atlanta, we'll pay you a standard fee, 3%. That's your fee. Again, whether you're going to take your client from soup to nuts and close the deal, or whether you're just going to call me up one day and say, Charlie, I got a client looking to invest, see if you can sell them something, and if we do, we'll pay you a fee. So regardless of what your level of involvement is, anybody that's referred to REO reseller will pay a fee of 3% on any transaction. Now, we do have additional inventory. We're currently looking at Jackson, Mississippi. I actually have a couple of homes in Jackson right now. We like that market there a lot. Also, Memphis, Tennessee, that's another market that's emerging in terms of values. Yes, if you've noticed that we've jumped around from different markets, the reason is we just simply have to. We do these webinars typically with third-party administrators, meaning people that manage people's investment portfolios or retirement portfolios. We have to be a one-stop shop, meaning we have to take care of the management and everything that we do for our client. But more importantly, we need to make sure that we continue to provide a decent yield. You look at some of the markets that are out there that have been really slammed, that have had a lot of investment activity. You look at Vegas, you look at Phoenix, you look at parts of Southern California. You can't buy value in those markets anymore. It's just not there. So being an investment specialized REO company, we just go with the market. Wherever the market's best is where we go. We do have both packages. Yes, we do deal with hedge funds, as I mentioned. I do deal with Blackstone. I deal with Colony. Deal with some of the larger hedge funds that buy packages. I've got packages as small as 9 homes. I've got packages as large as 323 homes. So we do have the larger packages. If you have an investor looking to buy something that's not just one single-family residence, or they're looking for multifamily, we can do that stuff. That's not where we spend all of our time. We frankly do that because we've been asked by a number of groups that put together investment portfolios, and now we're at the point where they see the value in selling them to one of these larger funds. So we do that. We do broker those. So if you have someone that's looking for a larger portfolio, you'd have to contact me, but we do have those available. So that's my presentation. I did less than 20 minutes. I want to thank everybody for being here. George O'Brien, your point of contact. You can contact me also. We will take questions if you have questions. If you look to your right of your screen, there's a chat box there. I think it says questions. You press that little button, and we will be glad to take your questions. I would open up the microphones, but we do have a large number of people on the phone today. I'm going to do another one of these as George requests. We did have about 70 people who registered, and about half showed up. So I'm going to be assuming we're going to be doing these again, probably within the next week. But if you've got questions, you can ask them now, or you can contact myself or George. So with that, I'll just hit my mute button, and if there's any questions, we'll be glad to take those. Okay, first question, do we ever get inventory in Las Vegas? The answer is yes and no, and George and I have had this conversation a number of times, but George will also tell you that every time we get something that looks promising there, something always seems to go wrong. The inventory in Vegas currently, at least from what I've been able to source, is very limited. The values of the homes there have gone up, as everybody knows, but to try to get packages there now is really, really difficult. Even finding just single-family homes that are good buys is really difficult there. So from our perspective, that's just not a market that we want to focus on right now. Remember something, in order to be successful at this, the one thing you have to do is have a presence on the ground. You can't just sort of bounce around from place to place and flip properties. I mean, I suppose you can do that, but we really try to be a full-service company to our clients, which means that we want to make sure that if the toilet breaks, we've got people there in that particular market that can go fix it. We want to make sure we've got a strong management team there. And so the presence on the ground means a lot. And if we don't have that, it really compromises the integrity of what we can provide to our client. We've had great success. We don't want to sort of mess with that. So Vegas is just not a place right now that we get much inventory. But as I told George, that if we do get something there, I will obviously pass it on to him. Okay, we have one more question here in the queue. Can someone buy using their 401k plan? The answer is yeah. Actually, most of our sales are qualified money. Most of the sales that we do, when we do webinars with third-party administrators, most of those sales are, I'd say probably about 7 out of 10 sales are through a self-directed IRA or a 401k. And in a lot of cases, too, what folks are now doing, they're setting themselves up as an LLC because it gives them checkbook control. So they set up as an LLC, they buy the property within that LLC, it gives them some tax benefits, and they do it that way. But the answer is, yeah, we're not a third-party administrator. We work with a whole bunch of them, though. We can refer you to one that can help your client get set up. But the answer is absolutely. You just Google buying real estate with your 401k or self-directed IRA. There's a lot of companies now that focus on, how they can help somebody take their retirement account and turn it into a cash-flowing, asset that's going to appreciate over time. Do you provide financing? The answer is no, we do not. We do work with a third party that's a non-recourse lender. I would tell anybody looking to buy investment real estate that you really are better off to either pay cash or to take a second out in your home if you need that cash flow, because the non-recourse lending industry, I guess is what you'd refer to it as, the terms are not that great. I mean, it's almost hard money lending. The fees are high. I mean, it's the lowest fee we've seen to originate a loan is $5,000, and if for some reason you get declined, they'll keep your $5,000. So I'm not a fan of non-recourse lenders. Haven't seen most folks have a lot of success with them. I would say that probably 90%, well, no, 100% of our homes in Birmingham have all been purchased by cash. In Atlanta, there's some financing methods in Atlanta, just simply because the values of the homes will appraise much better than in most other markets. But financing is not something that we do. It's 100% cash. Okay, there's one more question here. What commission do you pay on a bulk package? The answer is it varies. Every package that we broker is a little bit different. Minimum, I would tell you, would be 1 point. But those are big numbers because typically a package will be anywhere from $1 million to $10 million sale. So those packages, even if you do $1 million sale at 1%, it's still a decent commission. But they vary. And if you have someone that has a bulk package, that's different. If you've got a seller, your own seller, you can get as much as 3% on a bulk package on your side because we typically will get paid on the buyer side. So if you've got one that you want to sell or a group looking to sell a bulk package, as I mentioned a couple times, we do have inroads to most of the larger institutional investors. And so on something like that, you would just put in your real estate fee of 3% with your seller, and then we would then get paid by the buyer.